What drew into crypto originally, and how has your perspective on the industry shifted?
I joined the crypto space 6 years ago in 2019. In 2020, March, there was a big crash on the market. So Bitcoin price dropped to 3,000. But now, 6 years afterwards, you see that we also have a big crash, but it's totally different. Part of the reason of this bull run is definitely because of institutions. We still need to find the real use cases, the real application about blockchain in the future.
Do you think that basically centralized crypto exchanges especially need significant changes in their model, or maybe just slight tweaks?
I do think that moving forward, we need to be more and more transparent, but
Hello everyone, my name is Valdrin Tahiri and I'm an analyst for CCN, and today with us we have Cecilia Hsueh, the Chief Strategy Officer for exchange MEXC. So hello Cecilia, and thanks for joining us.
hello, hello everyone. Thanks for having me.
Yes, so let's start with something about you first. So you're the CSO at MEXC. So what drew into crypto originally, and how has your perspective on the industry shifted since those early days?
So I joined the crypto space 6 years ago in 2019, and at that time, I co-found also a centralized exchange called MEXC. And then 3 years afterwards, I co-found another chain, which is a layer two. It's called Morph. And now I'm back into centralized exchange again. Yeah. And well, what is my thoughts about the market shift? You mean during the past volatility, right?
In general, with the crypto industry, since your early days in crypto, how has your view changed on the industry in general?
Yeah, I think when I joined the space 6 years ago, I was still have a lot of uncertainty and also curiosity about the industry. And also, when I joined, I think maybe several months later, we actually had in 2020 March, there was a big crash on the market. So Bitcoin price dropped to 3,000. I think very close to 3,000, 3,200, something like that. It was a big volatility and big crash to the industry. And afterwards, it was just a long term of bear market. But back at that time, it's more about speculation of retail users, and people still have a lot of hesitation about crypto. But now, 6 years afterwards, you see that we also have a big crash 1 week ago, and but it's totally different. Like it's not a crash to the market, but it's more like a big volatility to the market. So you see that the price pick up very fast the next day to one I think 115, something like this, 112
Yeah.
thousand 1 day afterwards. So the price actually pick up very fast just after 1 day. You can see this is a big swing of the market price, but volatility is still there, and the traders are still active. But I know many are harmed by the volatility, but still, it's not like a big crash and then the bear market starts directly. So I would see that the volatility, the depth of the market is completely different from 6 years ago.
Okay, that makes sense. And yeah, so I just wanted to ask you about your article. So there you emphasize that liquidity is a key driver for future growth. So do you think that in this cycle, maybe liquidity is even more important than, let's say, new technology narratives or hype?
Yeah, I think both are important, to be honest, because without liquidity, like I said, like several years ago when there wasn't good liquidity, not good depths on the market, then once this kind of price crash happened, then all this liquidity is just taken from the market, and then the trading activity is extremely lower, and the whole market will go to the bear market. But within today, like more institutions coming into the market, and then with RWA, actually a lot of traditional financial money assets is coming on chain, so which give us a very healthy liquidity on the market. So once this kind of price crash happened on the market, this will not influence the market like completely, or there will still be very active traders on the market since the volatility is still there. But only if we only have liquidity, or we only have depths on the market, it's not enough, because maybe all this liquidity is coming from institutional clients. But if there's no innovation on the technology, or if there's no real use cases for to solve the real world problem, people don't use crypto, people don't use blockchain, or they are not enough on-chain activity, then still the market will go to bear one day, because institution cannot save the industry. It's more about how many people are using blockchain for real. This is a key to the market.
So basically, we believe that the liquidity is much better right now than it was in like 2017 and 2021 bull cycles, right?
Yeah.
Yeah. And okay, but just to add on that, like the recent crash has created a lot of debate about like liquidity and market makers. And this was especially emphasized on Binance because a ton of assets like USDE, BNSOL, BF all crashed. And let's say some like large cap altcoins, for example, Cosmos, Atom crashed to 0.01 cents, if I'm not mistaken, in an hour. So that's a 99% crash. XRP fell like 85%. And like I've traded since 2018, so I've seen the COVID crash of March and the 2021 crashes, and nothing was close to this in the short term because they bounced back. But why do you think this happened? Like there is some data which is still unconfirmed that suggests that some market makers withdrew during the crash. How do you think it's possible for an asset like XRP, which is, let's say, the fourth biggest asset, to crash 85%? And do you think that's normal?
Well, of course, I don't think it's normal, because as you said, that we've been in the industry for years, and we've never seen something happen like that. And it just bounced back immediately after one day, which means that it's not the real crash of the value of the token, right? It's more about the market maker, or maybe some exchanges the outage, or something like that, or technical problems. But I cannot comment on that part, because it's basically happened within certain exchanges, and they will give you more clear answers by that. But yeah, to answer your question, I don't think it's normal. We need to avoid such things happening in the future, especially as the exchange, because exchange is the infrastructure of all tradings, right? If we have problems with like market makers, or our the charts has problems, it will be like something happened in 2020 when I remember it was like BitMEXC. They have also technical problems, or technical problems or chart problems, so that a lot of other exchanges will also have these price problems, because a lot of other exchanges use the BIMEX price as their market price. So yeah, this will definitely influence the traders, as the the platform is basically the trading infrastructure. So yeah, we do need to look into these problems and see like how exchanges can avoid these problems in the future.
MEXC, like specifically, are you taking any steps to like ensure that market makers follow rules, or something similar has a a smaller chance of happening again?
Well, I would say that first of all, during the past big volatility during last weekend, MEXC didn't see any problems happen like this with the market maker issue, or the chart issue. So because we actually we have very, like, originally we already have very strict principles and rules for all of our market makers to follow the rules of the market. And second of all, I think to go on, actually, Maxi always insists or stand by the principle that we should keep a very fair and transparent trading environment for all retail traders. So I would say this is the foundation. This is the key to how we operate the trading platform itself.
Do you think that like high leverage plays a role in such basically flash crashes, just triggering a cascade of liquidations once the price drops below a certain point?
I think there are like several reasons behind. But yeah, and also I think the original reason is because many users, they're taking not advantage, but they are trying to find a way like how to maximize their profits from USD yields, right? So this actually, when the political reasons happen, and then when market is not confident, and then people try to withdraw or try to swap their money into different trading pairs and try to take away the original liquidity. So that actually caused the crush on the market. So yeah, there are several reasons. And then during certain big volatility, during this kind of edge cases, infrastructure, the trading platform as infrastructure is very, very important. So how to make sure that there's zero downtime, zero slippage, zero outage during this kind of edge cases as a trading platform is very important. Otherwise, within one platform, you will see users get liquidated, and or people cannot withdraw their money, and then series of outcomes will happen because of that. So still, I think it's not only about high leverage. It's about users has certain type of trading behaviors, and all their trading behaviors is because that they want to chase for high profits. They want to leverage their assets. They want to use. They want to make sure that they maximize their profits. So they always find a way to maximize their profits with different ways. And then once the black swan events happened, the trading platform as infrastructure should make sure that all users will still trade smoothly. They should exit their assets smoothly. So I think this all of the reasons combined cause what happened. So this also give us a big caution, a big warning about what we should do, what we should improve next.
All right, thanks a lot. So yeah, moving outside of the last week's crash. So right now we're seeing that tokenized assets and stablecoin inflows are pretty central to crypto markets, and it's probably unlikely that the current or the next bull run will be driven by retail like the past ones. So do you think that institutional capital rotation, maybe like pension funds or sovereign wealth funds or banks, will drive the next bull market, or will it be something else entirely?
I think for this cycle, people also think the same, like institutional assets or institutions from traditional finance will save the market or save crypto or bring us the bull run, which actually part of the reason of this bull run is definitely because of institutions. We cannot deny about this. And also we see that Bitcoin, Ethereum is becoming more and more like mainstream trading assets, even for TradFi world. So this is a good sign. But again, to me, I think we still need to find the real use cases, the real application about blockchain in the future, because the real bull run will come, or the stability of the next round will be more retail users who understand about crypto, who use blockchain in their daily life, so that you will have institutional assets and then retail users' assets. And meanwhile, you still have the original OG, very degen speculation assets in the liquidity pool. So with all these combination together, I think this will be the fundamental thing about the next bull run, not only institution.
Yeah, that makes sense. Okay, so then the final question, in practical terms, since we talked about liquidity a lot, what liquidity indicators, maybe trading depth or cross-exchange spreads? Or basically, what indicators do you monitor most closely to assess whether the market is healthy or not?
Well, definitely we for example, during the past like I said, during the past crash, I think it's around like 19 billion, right? 19 billion USDT worth of trading assets got liquidated during the past volatility, and the market is still like back into the track within 1 or 2 days. This actually shows is already a good sign of liquidity on the market now, and not like when the price crash and then all the liquidity just directly go away, which means that after the crash, there's still very active as treasuries assets on the market to be the buying power, and people will still come back even after the crash, and people is willing to pick up the discount price and like build up their buy position with the discount price, which is a good sign of the liquidity right now.
Okay, that makes sense. Okay, maybe just one final one. Sorry. So, yeah, just one thing. Do you think that basically centralized crypto exchanges, especially, need let's say, significant changes in their model, or maybe just like slight tweaks? I don't know, maybe circuit breakers or something to, like, I guess, protect from crashes like this? Or do you think that the current system is working as it should?
I actually, there's of course there's a debate about DEX and SEX during the past week, saying that the centralized exchange is actually not transparent enough, and they will manipulate users' trading assets, which I do think is a big push to our sector as centralized exchange. I do think that moving forward, we need to be more and more transparent in terms of our AUM, the users fund, and the way how we trigger all these risk control, and also the risk, the limits of um, like how we insure users funds, and the insurance fund about the total trading platform. I think this will push us moving forward to improve the whole mechanism. But uh, still, I don't think that all exchanges face the same problems. It's not a common issue happened across different exchanges during the past crash. It's more about single exchanges, a single exchange, or certain problems happen within the exchange. So for us, it's more like we keep building, and we still make sure that we will keep transparent and a smooth trading mechanism to our users as much as possible. And also we learn from what we see from other exchanges. So I don't see that there will be a big switch or big change from the centralized exchange model. But yeah, we will definitely look into like DEX side and see how we can be more transparent as they do.
All right. Well, yeah, thanks a lot, Cecilia, for taking the time to do the interview. That was very insightful. And yeah, I wish you the best of luck in the future.
Yeah, thank you so much.